We are now joined by Kunj Bansal, Executive Director and Chief Executive Officer of Chief Investment Officer of Centrum Wealth Asset Management. Kunj, new bank license finally for IDFC. What does that mean for the stock?
I think in the short term it could clearly be a sentimental positive, but if one looks at the working, the financials that will span out over the next at least 2 years, I think they'll go under a stretch for that phase of time. But market is bullish. Sentimentally, news is positive, so it will certainly be a short-term positive for the market. Also, if we slightly broaden our horizon to the past licenses and bank performances and all, we have examples of returns coming in, multi-bagger returns coming in from banks like Yes Bank, Kotak Mahindra, and few others. At the same time, there are forgotten examples like Global Trust Bank.
Kunj, technically a new bull market has started. Fundamentally, do you think a new bull market has started?
Yeah, so, I'll put it in like this, that there is obviously the market has been going up. We have seen significant amount of investor interest, which obviously given the India's market cap, liquidity and the depth comes largely from FIIs. Now, but that's just a segment of the market in my view. Now, why this interest has come in? Now, there is a general perception that because of the political expectation of a stable government, and that too by a certain particular coalition. I have slightly different thought that in my view, maybe that's not the only reason, or certainly that's not the main reason. Maybe that's a supportive reason. What is the reason? Is that there has been significant improvement in the macroeconomic numbers of the country. And part of that credit we have to give it to current government. Now, keeping the credit and debit aside, coming back to the what are those macroeconomic numbers? We have clearly seen inflation significantly coming down. We have clearly seen the trade deficit and current deficit coming down, which is what has resulted in currency remaining strengthened to whatever it is currently in absolute terms, and even compared to the other relative.
RBI is still sounding hawkish. CPI is at 8%, and the reason why trade deficit has come down is because gold imports are down, and the reason why gold imports are down is because globally gold prices have come from $1,500 to about $1,300. So what is the big deal about it? Exports are still down. If I look at the last trade data, export growth is only 2%.
Okay, so fair enough, as they say that how do you want to look at a half-filled glass, but still, to add to the numbers that you said, not disputing that, gold import very broadly, my numbers might be a little bit here or there, in the last full financial year was about $55 billion. Yeah. This year, current 11 months is about $27 billion or thereabout. So broadly, it will be down 50%. Now, let me also put as an aside that remaining 50% might have come through unofficial channels. But the fact remains that the official books of Government of India have seen that import. Export numbers for the first 11 months, we have seen, I think, roughly about 7% growth, and imports is down 12-13% first 11 months. So yes, gold import, that was the main reason for the currency weakness also. So that is what something needed to be tackled, and the government has quite proactively tackled it. So, but coming back, inflation, trade deficit, current deficit, fiscal deficit, which is still out of probably control, but at one time was being touted as the biggest problem that could be there. Now nobody is talking about it. Now government has quite reasonably well managed it. Now how it has managed it comes also along with the other reforms. So telecom auction, which was expected to garner 40,000 crore, has garnered almost 50% more of that. So it's 58,000 crore numbers. These are the reforms. The diesel deregulation have continued despite December State Assembly election results. Let's keep in mind, that was a very strong political reason for any government of the day to stop that there and then.
1st March, nothing. 1st April, nothing happened.
Yeah, so that was because when this deregulation was done, was said that this 50 paisa hike will be taken till the under recovery comes to 6 rupees. Yeah. Now, which is where it has come to. So now that nobody knows whether it should go to election commission, or whether they should continue, or whether they should. So that's where the things are. But I guess otherwise they might have continued. In fact, EC might have counter questioned that why you have stopped, if they would not have continued, but for this 6 rupees reason. So coming back, my view is that a large part of this investor interest, or if I call it smart money, has come in because of the significant improvement in the macroeconomic numbers. Now, added to that, it will be a golden touch if we have a stable government. Okay. So that's where bullish market is there, and I feel it will continue. So pending election results, we could see another 5-6% index movement, and accordingly more or less in some other sectors and stocks.
What would lead the market higher? Because now there is this big debate about whether one sticks with this cyclicals, or should one, stay put with IT, pharma, the ones which have already worked for you.
Sure. So, let's again put this very briefly in some numbers. Today, currently, Nifty is 6,750 odd yesterday's closing. Now, let's take the next psychological good number as 7,000. So, it will be about 5% rise. Now, that 5% will be led by what? Obviously, it will have to be some high-weighted Nifty stocks. So, to answer your question, I think Reliance is the one which has already participated but will continue to participate in a bigger way. ICICI Bank and Axis Bank participated in the initial part of the rally but haven't participated in, I think, last 100-150 points of the rally. They will be the ones which will come back. And Tata Motors and Mahindra, they are the ones who have not participated as much, will be the ones which will participate. I somehow don't feel that Infy and TCS will be the leaders in this next round of 5-6% rally of the market.
And no pharma stocks also?
No. This is purely based on the momentum that is there in the market. Such a short-term movement of the market, in my view, probably cannot be predicted or cannot be justified on the reasonings of valuations or fundamentals.
So you're saying it'll be 7,000 within this month?
I'm not saying that. I'm saying, to answer your question, that if the 7,000 goes to, then what are the stocks which will lead the rally? But it's still coming back. We might as well be at 7,000 in next few days.
Mahindra and Tata Motors, two ends of the spectrum. One is export, second is domestic. Tata Motors, the domestic business is not doing well. For Mahindra and Mahindra, the tractor business is doing well. Can both these stocks move up in a synchronized manner?
Okay. First, as I said earlier, that these kind of short-term movements might not necessarily be justified on fundamentals and reasoning valuation. It will be more of the momentum that who have participated and who has not. So as we have already been seeing in the market, there is the theory of rotation which has been working. So one day we have public sector banks participating, other day we have infrastructure stocks participating, third day we again have private sector banks participating, and in that, despite defensives not participating as much in last 3 months, on some on and off odd days, we see suddenly IT interest coming back. Yesterday, we saw pharma interest coming back. So that's one reason that I feel M&M and Tata Motors will participate. Number one. Number two, Tata Motors domestic business is hardly any now, 15-20%. So to that extent, it will be global which will continue to lead the rally. So I guess it will be the investor interest, the FII flow, which will now look at that where else we leave. Now, if we expand our horizon to include the other stocks of automobile sector. Why did Ashok Leyland move up 30%? I don't know.
More than 30 actually.
More than
30% from the
So if that can move up, so might as well Mahindra and Mahindra be. Eicher Motors, of course, has continued to move up and moves up justifiably on the fundamentals. Whereas while its Volvo Eicher JV's numbers are in line with the commercial vehicle industry and are down, its two-wheeler business of Royal Enfield continues to go up. In fact, almost 100% growth in the volume and could be more.
Which is one auto stock you own?
Yes.
So you own Eicher Motors?
Yes, we own Eicher Motors, that's right. We partly own Mahindra and Mahindra as well. Very selectively Tata Motors, we don't own Ashok Leyland.
Why Reliance? Well, definitely the stock has given a breakout off late, but the news flow is still looking a little bit grey. The KG-D6 gas issue is not really solved.
Yeah, so, again, while I certainly don't have very specific reason, as I said earlier also, specifically in terms of fundamentals. Now, again, using the phrase, smart money knows something 6 months in advance, which people like me won't probably know. Only when I visit you 6 months later, I'll be able to tell you that, okay, look, see, new government came in, gas price hike was allowed, and the gas production has started to go up. So these might as well be the reasons which today I don't know. Smart money can also be wrong, and post-election result, market could be back to, let's say, 6,200, 300. All these stocks could be down, and we could be discussing the reasons that why they are down, why the expected developments did not take place. So I think, one, I don't have specific reasons now. As I said, it's purely the short-term moment of the market. Two, also the fact that 5 years the stock hasn't participated. And to that extent, it has to catch up that underperformance gap. And the expectation of performance which it goes up if one starts to look at very briefly into the other businesses that it has gone in. So its retail has kind of started to be looking reasonably decent, although very small business. How will its telecom foray pan out? We don't know. But could that be a trigger for the company? Possibly, yes. So these will be the reasons we'll have to see. It's shale gas forays in the US, which again is a relatively smaller part of the business. But could that be a big booster?
Kunj, PSU banks in general have done well, but Bank of Baroda specifically is up 36%. Is there anything unique or special about Bank of Baroda, and why BOB has done much better than a PNB or SBI?
So, I again don't think that I can very specifically assign any reason to outperformance of Bank of Baroda, which you are right that has been better than some others. But let's look at SBI. A stock at 1400 rupees, and when it was looking like everything is doomed for SBI, is today at 1900 rupees. So 500 rupees movement in probably 15-20 trading sessions. Bank of Baroda in general has been considered a relatively better managed banks, despite the changes in the managements and all. In terms of valuations had gone significantly down, I think 2 or 3 quarters ago when they reported the higher NPAs, which coincidentally tends to coincide with the changes in the management in case of public sector banks. Maybe in private sector banks we have not seen changes in management, but maybe there also it will happen once we have the changes in the managements. So that was the second reason, and I think coming back that within large caps, if PSUs, if one has to move next to SBI, then what? Which is where PNB, Bank of Baroda and Union Bank tend to come in.
Kunj, closing comments from you. Since it's currently a one-trick pony for Indian markets, markets are moving up only because of global flows. Are investors better off giving Axis Bank and HDFC Bank a skip? Because both for Axis Bank and HDFC Bank, the FI limit is frozen. So you have a situation where foreigners, they want to buy into this bank, but the regulatory hurdle does not allow them to buy more.
So before I specifically answer your question, I slightly differ from you that market is not going up because FIIs are coming. FIIs are coming because they are seeing something in India, the improvement in the fundamentals and expected growth which will continue to come. Coming straight to your answer to your question, yes, I think so. One way to look at is that buy a CNX Bank Index. So that takes care of all these issues. But yes, pending that, since FII limit has been achieved wherever, there could always be trades within FII segment. There'll be short-term hedge funds who might have bought some time back and might be wanting to exit at a 5 or a 10 or a 15% gain. So the interest would continue to be there. But nonetheless, yes, valuation-wise as well as gap-wise, I think there are other banks and there are banks in public sector space which could be in percentage terms far more available, far more return giving.